Hey guys, and welcome to Road to Forex. Today we are kicking off a brand new series where we're going to be taking you from beginner trader right through to advanced trader. Now this is extremely exciting because it's everything that I think that you need to know in order to be that advanced trader. But it also means that I'm not going to be teaching you incredibly boring or stupid things like candlestick patterns or what a pip is. Yes, that's right, you really don't need to know what a pip is to be trading. It's going to be a shorter course, but it's going to be a brilliant course for you. And if you want the extended videos to these, the uncut videos, which are going to be filled with so much more information, then you need to sign up to the Patreon for $3 for the month. You're going to have access to the unfiltered course. What you see on here on YouTube is only a fraction of what you see over there. The link is in the description and you can sign up for that. So with that being said, let's get into today's episode. Now I'm going to be telling you what trading is actually about as the first part. A lot of people will look at trading and say it's gambling. It's gambling, you can't be making money in the markets. And you know what? For most of those people that say that, you are dead right. Why would I be saying that? I should be wanting you to get more and more involved in Forex so you can buy my courses, right? That's what you would be thinking. But majority of these people are correct because 90% of people that come into the markets will never make enough money to sustain themselves to have this as a career, even to have it as a side hustle. For most people, trading is gambling. Trading is an emotional based pastime. But if you actually want to make a go of it, you do want this to be your part-time job, you do want this to be your full-time gig, then no, trading is not gambling. It's the complete opposite. Now, if you are like me, what you will do is follow a process from step 1 to step 3 or 4 or 5. And that is how you will enter trades. Just like an accountant, just like a plumber, just like a doctor. Everyone has a process to follow. You need to replace the U-bend under your sink. What do? You start with instruction 1, and then you go and you follow the steps and the procedures. Otherwise, what are you really doing? You're just gambling. You don't really know what you're doing. Maybe you'll fix it, maybe you won't. Maybe you'll have to make it, you'll make it worse. You have to call an actual plumber in there, right? I just think Forex and trading as a whole has a bad rep because of that 90% statistic. So no, it is not gambling if you do it the right way. But that applies to literally every single profession out there, with some exceptions, of course, the rule. So what trading is, guys, is looking at the charts, essentially, and using this process to determine whether it's going to go up or down, for how long you are going to stay in that upwards or downwards move, and how long you are going to stay in it if it's going the right way or the wrong way. That's it. The markets are only ever going to go up or they're only ever going to go down. You just need to pick the right way. Sounds easy, yeah? And I think a lot of people overcomplicate it, but that is what it is. Now, before we move on to the next section, what I do need to tell you is this. It is not a get-rich-quick scheme. And that's what we're going into now. What you should be expecting from your first year in the foreign exchange markets, in the crypto markets, in the futures markets, because I trade all of them. Whether you're doing commodities or coins or Forex pairs, what you will be looking at. Now, first of all, I should say this. If you don't have a mentor, this does not apply to you. I don't think that you're going to do anything within the first year, theoretically. In fact, I would love to make that bet. And I will make that bet with you, with the people here that are sitting there going, no, I can do it by myself. Sure, absolutely. 90% of people fail in the markets. Let's make a friendly bet. $100, $1,000, whatever you want, let's put it on the line. And even if I do, 10% of you guys are gonna make it, 10%, and I'm going to win 90% of the time. That seems like a good bet to me. So the more of you that do that, the better. Now, if you have a mentor, your ability to get out of that 90%, massive majority, the vast majority of people, to get out of there, increases. Your chance of making it increases. Because again, Like I've said so many times on my podcast, whether you are, and let's use those professions again, plumber, accountant, doctor, a builder, you always get trained by someone who has experience in those fields. For some reason, people come into this and they go, oh, it's just trading. Just trading. I can do this by myself. No one really goes, oh, I'll be an accountant by myself. I'll be a builder by myself. I'll do these things by myself, because you know it's going to be super hard. What's easier? Having someone on the other end to actually teach you what you need to be doing. Hence why, if you're going in alone, this does not count for you. So I'm going to head on to the charts now, and I'm going to be showing you what is a good thing to aim for. So let's take a look at this example right here. This horizontal line that we have through here represents a month. And these lines that we have running through here represents the separation between the weeks. Week 1, 2, 3, 4. Let's just say that it's 4 weeks to a month. That's what we're looking at here. Most people are looking at between 3 to 5% when they come in. I'm going to make 3 to 5% per month. What is that? 3, 6, 9, 12. Even if you only traded for 10 months, that's 120%. 120%, which is crazy. Then you trade 11 months, which really that's what we do. We don't really trade in December. That's 132%. I can tell you this. If you're making 132% per year, well done. That's absolutely fantastic. Wall Street is going to snap you up. You are going to be gone. Every prop firm is going to want you. You have changed your life, etc., 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 though that doesn't really happen. If you're looking at it in terms of people like Warren Buffett, Vanguard, whoever it is out there, George Soros, these massive traders, do you think they're aiming for 3% a week? No, because I'll tell you why. And this is a big psychological trick here. Your average, if you are trying to do this at 3%, means you've got an absolute killer strategy. But it's not going to work out that way every month. It's not going to work out that way every year. I mean, every day or every week, right? It's going to go up and down. And this is what people do not think of when they hop in the market. Let's just say we make minus 2% so through. That's fine. That's all good. And then maybe we just have an average week and we do make 2% through here. Cool. And then I make 5 instead. Okay, it's starting to get a little bit better, and maybe I do make 3% through here. That's absolutely fine, right? Let's just say that. That could be a very, very average month. It could easily happen. And that's only with one losing week. That's only with one losing week, right? What you want by the time you come up to here is you're not 3% off the target already by week 2. You're 5% off because you're already minus 2 down, right? So the difference between making 3% and minus 2 is 5. So by the time you already come into week 2, you are down minus 5% in your average. Now think about this. Think about this. If you're minus 5% down, do you think you're going to feel easy coming into that next month? Do you think you're going to feel relaxed? Do you think you're going to feel okay? No, most people are not. They're going to feel the pressure. Okay, yeah, it's a good week. You trade perfectly or whatever it is. You're at 2%. Okay, now you're still 1% off the mark. So then you come into week 3. Now you're 6% off the mark. 6%. You do even better. Okay, you're 4% coming into this one. So you actually finished just having a very average one, minus 4%. You trade every single day. Every single day, you trade perfectly, and what can happen is you're minus 4%. So what happens if that next week or that next month, you start off and you just have an absolutely terrible nightmare of a one, minus 6%? Have you blown an account yet? Because if you're with any prop firms, you could definitely blow an account. And this is what people don't think of. Even if you can trade perfectly and you're aiming for 3%, which is still huge, psychologically, it's going to be so hard for you to get through there because of this, because of what's happening, right? You're going to be off it. And yes, the opposite is true. You could make a lot of money and maybe it's going to do better and you're going to be high as a kite. But a lot of people when they start off aren't ready for that. So let's look at what you should be aiming for and what's actually reasonable. Hey guys, just a quick reminder that there is so much more stuff that you are not seeing in this video here. If you want to see the full uncut version of this video, then you know what to do. Sign up to the Patreon. You're going to have so much more fun and so much more information over there. And you can even interact and actually request videos that you want to hear answers to. All right, let's get back into it. So this is an example of what is just a little bit more or a whole lot more achievable. Aiming for 1% per week, 4% a month, 44% at the end of the year. Still an insane amount. You've got a 100K account? Wow. You're going to be sitting on that $44,000. And that, anyone wants that. And you can see through here, psychologically speaking, and even though this is a pretty rough month, it just works out so much better. I'm 3% off the target here, so I'm -2. I'm trying to get 1. That's a 3% difference. Okay, cool. I am trying now to get for 1% and I go over it. Amazing. So I've now overachieved on this one. I'm not 3% off the target now, I'm 2, right? And then I hit here, I'm on 0% by week 3. All you had to do was be in there for 21 days. Anyone can slog it out for that time and then be back on target. And this is showing you that you'd be 1% off at the end of the month. That is so much more easily achievable than what we were looking at before, no? Because you only need smaller gains or to outperform your strategy from a very small amount to get back on track. And who's to say you cannot outperform 1% per month? But I'll go even further. Most prop firms, if you look at their scaling, it's based on a 1% increase per week. Now, why would prop firms have that? Why would the big guys whose sole job it is to find traders like you, or to at least hire them, that's what they want to be doing, why would they be basing on 1%? Why not 2 or 3 like I showed you before? Because this is sustainable. This is where you can make a lot of money. This is not gambling, right? Big companies, all of them, whether it's FTMO, the Fivers, whether it's the funded trader, whatever you're looking at, really based off this 1% principle here. So that's what you need to be emulating. And this, psychologically speaking, when you're trading, is far, far greater than anything else that you'd be looking at. 3%, 4%, 5% a week is ridiculous. All right, guys, that is it for this video. Please like, subscribe, and comment. And of course, if you want to see the full uncut version, then head over to Patreon. The link is in the description. And I will see you in the next one. Bye, guys.